Jerome Powell has this done a speech which made the overall sentiment in the crypto market more bullish. This is due to talks about the interest rate. But is that really the case? Let's talk about it. Hey guys, welcome back to Republik Lab's YouTube channel. In this video, we will talk about the current talks around Jerome Powell's speech and the interest rate. As you can see here, Jerome Powell has just done his speech yesterday, talking about the overall economic condition in the United States and the interest rate. He talked about the overall monetary policy and how it will move going forward. However, before his talk, as you know, the crypto market crashed a bit. Well, not a bit, but a lot. As you can see here, Bitcoin dropped from around 121,000 US dollars to around 113,000 US dollars, even as low as 100,000 US dollars in some exchanges. This is due to liquidations across the market. If you want to know more about the details, we have created the video here, talking about how the crypto market crashed last week and how it will move going forward. Currently, the focus has shifted into a more bullish narrative. This is because a lot of people are hoping that Jerome Powell's speech will deliver a sentiment that pushes the crypto market upwards. A lot of media has been covering it, and a lot of media has stated that the market is currently bullish. This is because a lot of media packaged it as a plan for a rate cut in the near future. However, what the people not realize is that the narrative is not really true. To understand this, we need to take a look at the speech. Luckily, the Fed always typed the speech into an article. As you can see here, this is the speech text of Jerome Powell's speech. The main focus of Jerome Powell's speech is set around the balance sheet. He highlighted three things. The first one is their policy in terms of balance sheet and purchases. In the speech, Jerome Powell mentioned that he admitted during the pandemic that he should not have spent that much money into the economy, as this pushes inflation upwards really quick. He and the Fed overall did not expect that inflation would rise this quickly, so he kind of regretted it by the tone of his speech. And going forward, he stated that we'll move and set policies according to data and only according to data. So this means that the outlook is not pretty much dovish, however, it will be more neutral. The second thing he talked about was the new framework for the policy, which is set around data. Currently, he talked about not being too impulsive and being accordance to the data of the economy. He mentioned a couple of data around the economy regarding inflation and employment. He mentioned that both data is currently looking a bit more normal, comparing the data to the previous condition during the pandemic. This shows a more bullish and a more positive condition in the overall economy, which translates into a more bullish narrative in the crypto market and riskier assets such as stocks. So this might be one of the reasons why a lot of media are taking the narrative into a more bullish narrative. However, currently, he mentioned that he will wait until the next policy decision because a lot of data is still seeming uncertain. So for now, according to his speech, in my opinion, Powell is not looking more dovish than before. So this means that the media kind of packaged it a bit wrong. The last thing he talked about is interest rate. He mentioned that this source of policy accommodation was important as we had lowered the federal funds rate close to zero. The key highlight is that he stated it is expected to remain there for some time. So this means that Jerome Powell is not planning to change its monetary policy in terms of interest rate. He mentioned this while talking about the overall economy and the balance sheet, essentially closing out his speech. This means that currently there is no change of plans in the monetary policy, especially regarding an outlook that is more dovish. So, the narrative of a more dovish outlook is apparently wrong. However, the market is still hoping that this is not true. This is because if the Fed becomes more dovish, then this means that the monetary policy and the interest rate decision will change. This will equate to an interest rate cut, which will translate into a more bullish crypto market. Aside from the crypto market, a lot of riskier assets such as stocks will also become more bullish. This is because a dovish economic condition translates into more bullish riskier assets. One of the person that is keeping the narrative is Donald Trump. As you might remember, Donald Trump has been pushing the bullish narrative through a dovish policy stance since he became president. He has urged over and over again for Jerome Powell to become more dovish in the economy. This push is still happening up until last month, so he still hopes that Jerome Powell becomes more dovish in terms of determining the monetary policy. Currently, the interest rate of the United States is around 4.25%. A lot of people are hoping that it would go down to 4%. However, looking at the speech from Jerome Powell, this might not happen. But looking at the history, especially last month, there was an interest rate cut. So the possibility of an interest rate cut still exists. This is because the decision will only be made next month. So all we can do now is just wait. However, sadly, this might not translate into a more bullish condition due to other countries, specifically important countries in the financial market, not being dovish yet. One of the key highlights is Japan. As you can see here, Japan is planning for more rate hikes, which means that it might increase its interest rate. Currently, the interest rate of Japan has been increased from being negative to now being 0.5%. According to data from Trading Economics, this only happened in less than a year, which is surprising and might cause changes in the market. Currently, the Bank of Japan's plan is to hike interest rate. This is also influenced by the change of Prime Minister and the voting of the new Prime Minister. So overall, this might increase volatility in the market, especially riskier assets. This might mean crypto and stocks will be impacted due to the carry trade. If you don't know what the carry trade is, it's basically a mechanism that institutional traders and retail traders use to borrow more money. They essentially borrowed the Japanese yen and then traded for the US dollar. Since the United States has higher interest rate than Japan, this means that borrowing yen makes it cheaper. It makes it cheaper than borrowing the US dollar. This means that traders from the United States can borrow the yen and then pay a smaller fee for it. This was what made liquidity higher in the market. This is because a lot of people are trading for profit and then paying a smaller fee for their leverage, essentially utilizing Bank of Japan and the US dollar. However, if the interest rate of Japan becomes higher and then the United States do more rate cuts, this might create a new perspective. Essentially, if the US interest rate is lower than Japan's, this means that the carry trade might not exist anymore. So this means the bullish narrative might be hindered. So overall, looking at the economy, currently there are a lot of volatilities that might come soon. So the market is not really dovish yet, which is why you still need to manage your risk better and also stick to your trading plan or investment plan. Well, that's all the information I have today. If you guys like content like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when we next upload. Cheers, guys!